Hello everyone. In this video presentation, I would like to explain about today the Nifty has crossed the important resistance level, that is 10,500 of the level, and I would like to discuss about the next target price levels. Along with that, I would like to discuss about the two more stocks. Those are belongs to the large cap stocks in the Nifty 50. One is the Cipla Pharma and other one is the Tata Consult TCS. Today, the technical view, Nifty forms hanging man of the pattern. Before that, I would suggest everyone to go through the disclaimer once. This content is designed simply for informational and educational purpose, not recommendations or tips offered to any of the person, group or individual. Before taking any position, please consult your financial advisor or do your own individual research. We don't accept any kind of the profit and loss occurring by usage of this video presentation. Now let us enter into the main discussion part. This is the Nifty daily chart. If you observe over here a rectangular box, it's a hanging man is the technically, and this one is the Nifty daily. It has crossed the breakout clearly over here. This of the price level. The technical view, Nifty forms a hanging man of the pattern. 10,850 crucial levels for bulls for the further uptrend to continue. The Nifty VIX fell 0.68% to 12.36 levels, has fallen down from the last 5 trading sessions, and the lower volatility indicates the bullish stance of the markets till it remains above the 13.5 zone. The Nifty 50, which started off the week on the positive note, maintained uptrend throughout the session and managed to hold about the 10,850 of the levels. If you remember, like my previous video, I clearly explained about the Nifty 50, which has formed over this one is the bullish island kind of the pattern. So it moved over here. The last 4 of the trading sessions, it has given a clearly breakout and forms over the hanging man kind of the pattern. The next target lies over here, and the index has made the bullish candle which looks like the hanging man kind of the pattern. And the Nifty 50, which opens today at the 10,838 point and jumped to the intraday high of 10,860.35 before the closing of 80 points higher at 10,852 kind of the level. And the global Qs lifts Sensex at 277 points ahead of the Q1 financial year 19 earnings. The next target lies around the 10,900 kind of the levels, and above that is this one clearly of the 11,000 kind of the mark, which is the historical all-time the high of index. In the global kind of the positive news has really in the global markets also pushed the Nifty towards the historical mark. If it crosses the 10,900 kind of the level, the next resistance line is around the 11,000, above the 100 kind of the points. The private sector lending IndusInd Bank and the software service exporter TCS will begin in the June quarter earnings sessions on Tuesday, that is tomorrow. Equity benchmark begins the week on a strong note on Monday, gaining over the 0.7% on the positive global cues ahead of the June quarter earnings. Banks and the metal stocks and the Reliance Industry, L&T and Infosys drive the market higher. In the broader market, mid-caps had a good day of the trade as they outperformed the frontliners. The Nifty mid-cap surged the 291 points. There was a last hour surge seen in these stocks that leads to up move on markets. Meanwhile, banks too gained lead by gains in the names such as Karnataka Bank, which was up over the 7% in the trade. The Sensex ended higher by 276.86 point or 0.78% at 35,934.72, while the Nifty was up the 80 points or 0.74% at 10,852.90. The market breadth was positive. 1,722 shares advanced against a decline of 892 scripts, and while the 162 scripts are unchanged. And the private sector lenders Indus in bank and the software service exporter TCS will begin the June quarter ending sessions on tomorrow. And I would like to discuss about what is exactly the hammer candlestick. This pattern occurs at the bottom of the trend or during a downtrend, and it is called a hammer. Since it is a hammering out of a bottom, it is signal the candlestick pattern that had a long lower shadow and small body or very near the top of its daily trading range. Recognize the criteria. The market is characterized by influencing the downtrend. The small body at the upper end of the trading range is observed. The color of the body is not important. The lower shadow of the lower shadow of the candlestick is at least twice as long as the body. It is almost no upper shadow. If you observe here, the very little kind of the upper shadow, and the long it is almost a double, and we can say is triple the time. Also the lower shadow is the pattern recognition, the flexibility. The body of the hammer should be the small. The lower shadow should be at least twice as long as the body, but not the shorter than the average candlestick. It is desired that there is no or very thin upper shadow. The bottom of the hammer body should be the lower than the bottom of the two preceding black candlesticks. Trading behavior. The bullish hammer appears in a downtrend and it sells off sharply following the market's open. After the declines ceases, the market almost returns to the high of the day. Clearly, the markets fail to continue on the selling side. The observation reduces the previous bearish sentiment, causes the traders to feel increasing uneasy with the bearish position. If the body of this hammer is white, the situation looks even better for the bulls. Moving on to the next is the Sipla. It's a daily candlestick pattern. If you observe over here, that clearly I would like to discuss about the bullish harami candlestick. Today it has formed the bullish harami kind of the candlesticks, and if you observe over here, the resistance kind of the level above this, it closes around the 622.90. so it has given a breakout over here, and if you observe over here, it is almost the price has touched the multiple. Once it touches, second, twice, thrice, and over here it closes exactly of the resistance of the level. It is the low, and this one is the open kind of the price, and it went up, and this pattern is almost looks like the bullish harami candlestick. The harami word defines in Japanese as a pregnant. This candle pattern consists of the red body and a small white blue body that is completely inside the range of the red body. This is completely inside the range of the red body. It is an outline is drawn for the pattern. It looks like some pregnant woman. This is not the coincidence. Harami is an old Japanese word for pregnant. The red candlestick is the mother and the small candlesticks is the baby. This one is the baby, and the recognition is the market is characterized by influence in the downtrend. If you observe here, the downtrend means it touches the resistance level at the price level of 648.26 kind of the levels, and the bottom is around the 507 kind of the levels. And when it touches over here, it started out the slowly bouncing with the market. Good news on Sipla. So the black or red is observed on the first day. So generally the bullish harami is a two candlestick kind of the pattern, and the blue body that is formed on the second day is completely engulfed by the body of the first day. So this is what, and the pattern recognition and the flexibility. The pattern consists of the two candlesticks in which the first day is the red candlesticks engulfs the following the day of blue candlesticks. The first one has the normally long red candlesticks, either the body top or the body bottoms of the two candlesticks may be at the same level, but whatever the case, the blue body should be the smaller than the previous red candlesticks. So the trading behavior. The bullish harami is the sign of despair of the market health, and the market is characterized by the downtrend and bearish mode. And the moving on to the next is the, so for this the resistance, the next target of the 648.26, below is the around 610 kind of the level is the stop loss, I would suggest. And the moving on to the next is the TCS daily candlestick pattern. If you observe over here, the price from over the level of the 1391.26, from there to the high of 1780.7, here till the point is completely uptrend and little bit of the consolidation. Again it has given a breakout around the 1780.17, and it breaks the resistance over here and could not able to sustain, and immediately the next day is mostly I can say it has a profit booking happened over here, little bit of consolidation, and above this of the level I am bullish further of the upside to the 1941 to the 2000 kind of the level marks, and below this I am bearish considering around the 1900 kind of the levels. And the candlestick pattern is clearly looks like a bearish dark cloud over. This is a top reversal pattern which is a two candlesticks, and the blue body candlesticks appears on the first day while an uptrend is in progress. The second day opens at the new high. This one's the high and the no upper shadow. Remember, with the gap up and closes are more than the half into the priority of the leading to the formation of the strong red candlesticks. And the pattern recognition and the flexibility. The first day of the bearish dark cloud cover pattern is normally long blue candlesticks. The second day opens well above the close of the first day, closes more than half of the red of the blue candlesticks body. So this is what about the three. One is the index Nifty 50, and the two are the large cap stocks. So this is what. Thank you guys, thank you very much for watching this video. If you like this video, please subscribe and stay for more of the updates. Have a good and safe trading.